Welcome back to Power Lunch. Mike Santoli. It is time for Trading Nation. Boeing tanking today as trade uncertainties continue to weigh on the company. The CEO sitting down with CNBC's Becky Quick earlier today and discussing the recent market volatility.
What you see is some local volatility again in the market because of some trade uncertainty. And we're hopeful coming out of the G20 summit that we're on a path to finding a trade agreement with China that's going to be productive for both the U.S. and China. It's a really important marketplace for us.
Well, given that uncertainty, how should you trade Boeing now? Joined by Matt Maley of Miller Tabak, Stacey Gilbert of Susquehanna to talk about just that. Matt, this was such a leader going into the market highs earlier this year, down pretty significantly from those highs. Where do you think it is set up right now?
Well, it's definitely I've become more concerned about the stock recently. I mean, you mentioned how it's such a great leader. But the problem is the vast majority of its gains came in the first 2 weeks of the year. So, and then it's been kind of stuck in a range lately. And so it's been kind of dead money for almost 11 months now. More importantly, that range has been kind of a wide one. And it's actually formed what's called a broadening top. And the problem with broadening tops, they're very rare, and some people call them megaphone patterns. But anyway, they're very rare, and they usually signal a top for the stock. So if we break down below the lower end of that pattern, it's going to be a big concern for the stock, at least on a technical basis. Having said that, that low or the lower end of that range or of that pattern is down at 300 or a little below. That's still 10% below where it's trading right now. So we can't get too concerned about the stock quite yet. But again, unless we get something better coming on this trade front, this is something that is becoming more of an issue on a technical basis.
Yeah, Stacey, obviously a lot of issues surrounding Boeing, right? Not just the uncertainty on trade, but just the fact that a cyclical industrial capital goods company, sometimes is in doubt because of a slowdown fear. So where do you think this one sits in terms of investor positioning and sentiment?
Yeah, I actually think the CEO hit the nail on the head when he's talking about it in terms of volatility. That's what's changed most aggressively in this stock. If we think about the positioning, we're not seeing buyers of upside calls looking for a rebound or buyers of protective puts being concerned about the downside. We see them all. We see them buying everything. So they're just basically buying volatility. And just to put that in perspective, what does buying volatility really mean? If we were to look over the last 2 years, the likelihood that Boeing was going to be up or down basically 40% over a 1-year period was implied in the market at roughly 5%. It's now almost 7 times as likely. That's how that volatility number has changed. A 40% move up or down, that's basically a 1 standard deviation now. It's expected to happen almost 33% of the time. So the change of the trade tensions, obviously the comments from Lion Air, just the overall shift in a risk off in the marketplace has dramatically changed the risk profile to what Boeing shares can move. And I think that's what investors should be aware of. If they're thinking of trading options, just be aware that they're expensive relative to history. So you might want to consider spreads. Directionally, I would say right now, nobody really has a clue.
Technicians often look to wedge patterns as catalysts for stocks. A bullish wedge occurs within an uptrend and consists of 2 converging trend lines slanted downward. A break of the upper trend line is considered a bullish signal. Conversely, a bearish wedge occurs within a downtrend and consists of 2 converging lines pointed upwards. A break of the lower trend line is considered a bearish signal.